Sasha, welcome to Now Next Later for Monday, December 2nd. How are you?
Well, how are you, Jer?
Excellent, thanks. We're kicking off our in between episodes between the holidays. So now we had some fun last week. I was really excited how our Thanksgiving episode turned out. It's on YouTube. If you missed it, check it out. Kind of a fun holiday. And then now we buckle down for a few weeks before everybody disappears for the next round of holidays. And so we decided to have Marvin Chang join us today to talk some product management. Marvin, how's it going? Thank you to come.
Oh,
Thank you
pretty
for joining
good.
us.
Thank you for welcoming me to this
Yeah.
great convocation.
So Marvin, I wanted to do a quick intro. In my head, I always go Citi, Caliber, startups like Mortgage Hippo, advising and consulting, and obviously you're now a professor of fintech for Duke University. Did I miss anything that you throw in there when you introduce yourself?
Well, I guess I would say that early in my career, I spent time in Silicon Valley in high tech, so product management. I was at Microsoft, the dearly departed Sun Microsystems. I was in a really early fintech.
Hmm.
Actually got to know some of the players in the space early on, Web 1.0 timeframe. So yeah,
Yep.
so I left there. I went back into sort of the banking world, financial services world, but I always had had a sense of, hey, we're sort of not doing it correctly.
Hmm.
What's
Right.
the difference? Why is it so different, right? I mean, yeah, it's across, across the nation, right? Separated by continent, but why is financial services products different than sort of high tech products, and how is it done? So, a year ago, I joined Duke as a faculty member. I'm an associate director at the FinTech program. I always wanted to sort of circle back to I guess my home industry, mortgages, figure out how to sort of help the sector. And now that I'm getting my sea legs, I figured it's time to really double down. I'm focused mainly on sort of capital markets, internal sort of alternative investments as well as products at the program. So that's why I'm here.
You definitely teed up today's theme well. I appreciate that. Thanks for being here and running through your background. Sasha and I have been thinking a lot about the different ways in which you manage or control your mortgage company. Bank-owned mortgage company, mortgage operations at a bank, or obviously an IMB. And one of the things that keeps coming up is the Venn diagram is really overlapping, and it causes a lot of issues at lenders. Who owns the data? Who owns the technology? Who owns the product? What does product even mean? And so, today's theme, I think you nailed it when you said, how could we be doing this better? You and I met when I started asking those questions in the capital markets, going, how come we're doing it this way? How come we're doing it this way in terms of packaging up loans and selling them all off? And then you and I have worked for years on these product questions, both financial products and um, software products. And so I'll start there. I'll just tee it up with the conversation that you and I kind of always have, which is how do you talk about product management in a mortgage company where there's a 30-year fixed product, there's an ARM product, there's a renovation product, but there's also the consumer experience of the digital steps you have to take, see, interact with, which is also a product. Your app is a product. Mellow it. Loan Depot is a product. Rocket Mortgage has a product that is also the company, right? So there's these two levels of product. Can you walk us through how you advise companies, how you make that easier to understand for people in our industry about which product we're talking about when?
Yeah, I think the first thing is let's be real, right? We're not approaching it from the perspective, even though I was saying like how can we do it better? It's not that we're doing it wrong, right? We just evolved in a different way, right? We have always been, the industry has been, essentially survived because it is so focused on the product, which is the mortgage. And we are incredibly lean and mean and agile to be able to do this, right? Like you said, I got my start at mortgage in a bank. And safe to say, most of the large banks have dramatically left the field or minimized their exposure because they can't compete in this world, right? So we're really good at what we're doing. And but the thing is, the competition, the sort of the metrics where we compete against and we compete for customers and what the customers expect have been changing. And that's really
Hmm.
the starting point, right? I think you were at Rocket where you were ahead of the curve, right? You saw that. You started building out a company that is much more platform driven, right? Making those investments long time over the length of time, which is something that I think, what and you and I have been talking about it, right? We're starting to see more and more of that product mentality, product management mentality, where product is not just the 30-year fix versus the HELOC versus the ARM, right? Product is really what is the primary customer engagement activity, right? And that's really the product is now not just the mortgage, the product is the company. And going back to Rocket again, right? Rocket rebranding itself,
Hmm.
really, it's not the loan, it is the company. And that's really the one of the major differences between what we've seen in mortgages to date and what we see in sort of tech land.
With
Yeah,
that
I think
framing
that's a
in
great way
mind,
to put it.
oh, sorry, Jer.
Go ahead, Sasha. No, I was
Marvin,
going to throw it to you. Go ahead.
do you then see the company and the consumer experience as synonymous?
It can be, but it doesn't necessarily have to be, right? But I think where the rubber hits the road, it needs to be, you have to make a decision on this. And I think companies like Rocket have been doing it well. I mean, I have to say Loan Depot with Mello has, changed a lot, changed its stripes over time. You feel like, okay, there is probably some level of disagreement or just differences in opinion, right? In many of these companies, and that's really it. I mean, it doesn't matter what, you have to make a decision on it though.
Yeah, one of the questions I like to ask is, are you a referral company or are you a consumer experience company? Because it's very difficult to be both. And Sasha, you kind of nailed it
Mhm.
with which one are you? Are you actually investing in and worried about the consumer experience, or does consumer experience need to be just good enough to keep your referral sources, branch managers, MLOs happy? And they're really the customer.
And I think, Rocket is a great example of a company that went, I think, fully into consumer experience and very much build the consumer experience. And now we're seeing them back off of that a little bit and
Hmm.
invest more in buying technology, balancing it out with what are the things that make the most sense to keep in-house and build and maintain versus let's now augment that with some things that might be smarter to buy. Have you seen that trend as well for others, Marvin, and trying to still strike the balance and like buy versus build? And how do you advise people when you're teaching in that space?
Yeah, I think you have to look at this on a case by case basis, right? Because there's a tendency to build a lot. And I've been in platforms where, yeah, we built everything, right? Soup to nuts, loan origination systems, all that. We try to do everything. The reality is, even if you're the top dog, it's hard. You don't have the resources to sustain not just the build, but the maintenance, right? And I'll give you an example. One of my prior shops, a major shop, we created a really, I would say at the time, transformational mobile experience. App Store, all that stuff. Great. That was V1 was great. Then I looked into the budget for V2. We had a maintenance budget that was roughly about 2 weeks of technical time, right? That is too often that's sort of the situation, right? Where you build and you don't have the resources, the attention span to sustain. And in those situations, you may be better placed at bringing in partners that can help you, right? Whether it's if you acquire them or you strike up relationships with them, right? Where this is not your core, and they're gonna run this, the race longer, better than you can.
So that sounds like a good segue to what's next. You know, we talked for a minute here about the now, which is
Mhm.
you got to make some clear decisions. If you're an executive of a mortgage company, you have to make some clear decisions about what products you're investing in and why. You got to decide what your resources are for V1, V2, if there's ever a V3. And I think one of the hardest things, Marvin, about partnering, building, the maintenance you describe is what is giving you the biggest return for that investment? What are the things that you can actually know or at least make an educated guess will return that? And so we've seen a lot of focus on the point of sale. We've seen a lot of focus and money spent on the use of data, churning data, like how it gets used, whether that's in lead gen, whether that's under the hood in underwriting and moving some of the underwriting up and direct from the source. And then I would say the third is e-closing. You know, Sasha and I can't really talk on Now Next Later without noting that we both watched a bunch of money get spent on making a fully digital mortgage happen. So when you think of what's next, how do you advise mortgage executives? How do you advise tech startups? We have a lot of innovators who watch Now Next Later. How do you advise them on where to put the money? How are you
Oh,
thinking
trust
about it?
me, I've seen a lot of money spent on things, for better or worse, and many times it's the latter, right? I would actually say don't necessarily focus on the technology, right? Focus on the consumer behavior, consumer experience, all that, right? And you just think about this, right? Safe to say technology is changing dramatically. Like, a conversation now and last year, this time, very different, right? Technology,
True.
think about how much you have to do to just keep abreast of technology. Think about consumers. Consumers, lots of transformation, lots of change, but it changes, I would say, incrementally by comparison, right? It's better for you as a player in the space to be really focused, doggedly focused on how the consumer is behaving and interacting with you, and using that as the major, and using sort of your focus on technology as a minor. And I think that's a lot of times you see that, right? You see in you know the major mortgage companies, right? There's sort of a sense that product is a technology function. So you end up with product, that consumer experience, and even internal experience defined by technologists. And
Mm-hmm.
and they're safe to say a lot of times they're chasing the next cool tech, or defining this as a tech thing, when you really there are multiple ways to sort of address it, but you really should focus on the person before you can focus on the technology.
Yeah, Marvin, you
So,
hit on what I was going to say, which is expand it to user experience, not just consumer, because
Hmm.
sometimes the consumer behavior is on pause and there's internal things happening that the user, whether loan officer, underwriter, processor, et cetera, is working through. And the consumer can't do anything until those things happen. But that's still an experience that is happening that needs to be as efficient, as cost reduced, as time saving as possible, so that it's not only a beneficial experience for the people in those roles doing the job, but then it provides a better experience for the consumer and hopefully is a more profitable experience for the lender.
Yeah, you can't separate it, right? I mean, I think one area where I spend a fair amount of time is on verifications,
Mhm.
and verifications of employment and income specifically. And we've seen how one player has really, sort of exacted monopoly level rent. So many of the lenders I've talked to
Just keep
have sort
singing
of,
to me, Marvin. Keep singing to me. Carry
oh
on.
yeah, exactly. La la la. I never knew my voice was so resonant. Thank you, Sasha. No, but so many of these lenders are actually going back to accepting W-2s and pay stubs as sort of, hey, we don't want to pay this, right? But think about that from an operational context as well as a consumer context. Is it really the best path forward, right? So you can't just solve one without addressing the other areas.
Yeah. You mentioned earlier that in your experience, like going from the Microsoft of the world back into finance and really looking at the mortgage, that it's not that we've done it wrong, we've just done it different. Where do you see there still being perhaps obstacles for us to evolve in a way that would be more akin to what you would like to see in the fintech space?
Well, the obstacles. I think for us, for mortgage specifically, right? Going back to my point, we're highly adaptive, highly agile, right? Those who can't keep up don't keep up. Uh, the challenge in these types of environments is that we're sometimes too lean, right? Too lean to be able to devote time and effort into something that does not drive to the bottom line, right? You know, you and I, we've all seen this, right? Whether it's feast or famine, you know, when it's famine, okay, maybe the budgets are low, we can't afford to do this. And when it's feast, all hands on deck, gotta focus on what's important, drive revenue when we can, right? On both ends of that spectrum, innovation often suffers. Product, right? The ability to maintain something that is not directly connected to, you know, next month's production, you know, production outcomes is in jeopardy, right? And that, I think that's the thing that we as an industry need to figure out. How do we give ourselves a little slack, right? You know, build up some fat, as we've all done over the last week. And yeah, sometimes it's good, right? We're preparing for the winter.
So Marvin, that I think I'm being a bit cynical, and so I want you to hold me accountable. Like, it feels to me like what we're saying is that in mortgage, based on all the factors we're describing, the cost of technology, where the expectations are now, where they're going over the next year or two, am I wrong to say that we are a faster horse industry? That nobody's really changing the way consumers think about this. In fact, what we're really doing is saying we ask them what they want a faster horse, we give them a faster horse, and if you aren't doing that, that's who's falling behind. And that there isn't really someone stepping out and saying, let's rethink the whole thing.
Yeah, I mean, it's left alone, we are very much a faster horse industry. I think what we're going to see over the next, you know, next year or so, and I think the macro factors like open some opportunities as well as challenges, right? We're basically looking into a prolonged era of sort of higher for longer rates, right?
Mm-hmm. Yep.
We have an affordability crisis, certainly, you know, hitting good sized segments of the, you know, the home, you know, aspirational home buying community. And we have other areas like you know, potential privatization of you know, of the GSEs, right? So many of these will, who knows what's going to happen, but it's safe to say I'm going to bet that we will see more product variations, more product varieties. And you know, we've been really successful in an industry basically churning out mortgages on a very efficient, fast basis, or as fast as can be, right? Um,
Mm-hmm.
you know, we are what, like nearly 80% GSE product, right? But that's sort of an, you know, that's almost a misleading statistic, right? Because most of the large lenders are primarily GSE. And then, you know, if you're not doing a GSE product, it goes from, you know, super highway to the farm to market road, right? So we haven't had a situation where we've had to really optimize across a number of different products, a number of different scenarios, a number of different use, you know, sort of consumer, you know, aspirational outcomes, right? Once you get into a situation where you have a lot more variability, where, you know, combined with, you know, the products, combined with the information coming into it, I would say it's going to be harder and harder to run fast, you know, run the faster horse race.
That's a really good framing of it, Sasha. So Marvin's saying that there is going to be a need for more tools in the toolkit. We've already seen it a bit with channels, the channels of business that you have to have, or the way in which you have to engage. Now we're actually going the next step further. Now we're saying 2025 is going to kick off. You have to have more customization, more personalization, a better kind of curation around your customers or what have you. But I find that exciting and also daunting for this question of product. Who's going to architect that? And how do you actually start to change a otherwise manufacturing standard process, how many units are we doing per head in which department, to how do we make sure we engage the right tool, the right data at the right time for the right person. That architecture is also going to be kind of people heavy and expensive. So I don't know, Sasha, are you hearing or are you seeing that that is where we'll see more of the partnering that you mentioned earlier?
Yeah, I mean, it sounds like it. And again, to your point, it's like a little bit of, tongue in cheek with the optimism and also the, I can't remember the word that you used, but like grim look into the reality that we live in. But I keep waiting or wanting or wishing or hoping for something to come in that's a big enough catalyst that pushes us over that ledge. And I just don't see anything coming that does. It feels like it's going to be fits and spurts, right? Like we're going to have little catalysts that hit and it pushes us just enough that we move forward. For instance, COVID with Ron, right? And it moves the needle a little bit and then we stop again. It's like the hurry up and wait game. That's a combination of the faster horse with, hopefully some innovation in there for those of us who really want to innovate. But I also wonder, like, are the people that were trying really hard on the forefront to redefine this space, like the Rockets of the world, as they continue to trial and error, will they find the magic recipe and sauce? Or will somebody new enter the market and find a way to disrupt us? I don't know. I haven't seen enough of it yet to hold on to the glimmer of hope. Sorry, Jer. I think we're still going to be in the horse race for a little while, but I don't know. Marvin, any other thoughts to that end?
Well, I'll take a slightly more optimistic view, right?
Oh, good.
Because
Because normally I'm the positive, optimistic one.
come on, Sasha, it's you probably had too much turkey or something like that. No. I think what I'm seeing is efforts by other large platforms to really redefine themselves, right? To really focus more on the customer. Realization is, we're big game hunters, right? One mortgage yields a lot more than a whole slew of HELOCs, a whole slew of consumer loans, right? But when you are in a situation where the number of mortgages or the first mortgages are going down, and you find yourself with this massive funnel and customers, especially if you also have a servicing book, what else are you going to do with it, right? And then that's really the key, right? I mean, many in the industry are sitting on a lot of customer relationships that are, to be frank, barely harnessed these days.
I like to call that the challenge of our later segment here on Now Next Later. So, Marvin, why don't you paint us a picture, if you can, of what you think let's not call it the optimal future, and let's not call it like the dim future that we've decided we're going to put off to the side for a second. Let's just call it like your reasonable expectation of what that looks like for a mortgage executive on this call, listening to how do I think about my resources? How do I think about my goals? I want to set budgets and I want to set vision beyond 2025 and get started this next year. Can you paint us a picture of like what a mortgage experience needs to look like in that later phase of where CX is going, where the sort of data management you just described is going?
Yeah. Okay. So I think we're right now looking at neither feast nor famine, right? It's not the worst of times, certainly not the best of times, which in a way it's probably a good period, right? We're still sitting on there's still a lot of latent demand, right? Customers coming in, right? Now there's a little more slack to sort of optimize for something new. Um, Digital is important. Customers, we keep hearing about how customers are changing, and it's like a broken record, but hey, that's father time. You don't want to take the under on change over time. So it's critical, right? That's one piece of it, right? And now you are a mortgage leader. You have multiple channels, multiple products. How can you further stitch it together so that you're not going to be full board big game hunting because it's not feast period, but you have the opportunity to continue, right? You're back in profitability, so you have the opportunity to invest in this, right? In something newer, more customized for the the emerging consumers. And you also
Mhm.
realize you have new products coming aboard, right? And again, this is a good time because I've been in situations where it's feast time and like you can't even roll out a new product, loan product because there's not enough resources devoted to it.
Yeah,
So
it's
yeah,
always
so I'm going to
catch-22.
take an optimistic view on this. How's that?
I appreciate it. Go ahead, Sasha.
No, I was saying it's just the catch-22, right? When we're in the valleys, we don't have the money, the resources to invest the ways that we want to. And when we're in the peaks, we don't have the time. And so, to your point, if this is that sweet spot where hopefully we're starting to have at least a little bit more, money and time to consider the investment, and we're not, in that peak yet, and we're probably still a ways away from it, but we're not fully in the worst of the valley. Like, how do you start to think about climbing that mountain? What are the tools that you need to bring with you so that you can summit it quicker? Hopefully be better than just a faster horse. And I think there's a lot that lenders are going to need support with. This is not something that they can go alone. We need a Sherpa, multiple Sherpas.
I think that's a great call, right? The idea
Uh,
that this market offers you a year-long opportunity that we haven't had before because of the nature of the market. That we will see some uncertainty. I'm sure we'll be surprised by something political, something social, something global. We always are. But in this moment of planning, you cannot plan for those spikes. Instead, what you can plan for is I'll have just enough to sustain the business while I do some of these other things. And I think some of the commitments I've put off, what we're saying as our end of year advice is kind of like don't put them off anymore unless you really want to be out of the game.
Even if you
Once
don't
you
pull the trigger on
discover winners.
investing, you plan for it. And you have then
Mhm.
your scenario planning for how do I pivot if X happens, Y happens, Z happens. I think that's prudent.
So Marvin, let's
Great points.
yeah, this has been a great conversation. We have about 2 minutes left. So one of the things that we kind of like to do as well is close out on like a bigger question and sometimes more fun and innovative. So I'll just spring one on you. This is kind of like the hot seat because I didn't prep you for this, but what's the thing that you don't see someone working on that you wish there was a business working on? What's the thing that you say, hey, if you're a founder out there, if you're a wannabe founder, you need to be thinking about this business, or I would be focused on this, whatever it is that you see. Can you identify one of those? Does anything spring to mind for you?
Gee whiz, thanks for pulling that on me now. Actually, one thing that really just annoys me a lot has been all the strategy consultants, I've dealt with, who essentially have a throwaway comment about how mortgage is about 10 years behind the rest of financial services and technology. And
Hmm.
I'll just lay that as a challenge. It's like, why are we a decade behind? And these eminent consultants tend not to have a good good explanation or a good solution, right? So I think that is that if anything, that's a major opportunity for innovators to come in and try to close that gap.
Yeah, right on. I mean, I think specificity is key. So anytime you have the like, hey, you should just cut costs and increase revenue, it's like, yeah, no kidding. And the reality is like, how would you pinpoint exactly what to do if we are 10 years behind and you acknowledge that as a core assumption of your business? What do you do about it? What's the first thing you do? And so I love leaving it there. For me, it always comes back to the LOS, the cost of it, the clunkiness of it, who's in it, how you manage it. But I'm sure we'll pick that up with future guests, and we'll definitely have you back for part two on Now Next Later, Marvin.
Well, thank you for the invitation, Sasha and Jeremy.
Thank you, Sasha.
Yeah.
Great to see you. Have a
Okay,
wonderful week. Talk to you
Thanks,
soon.
you guys
bye-bye.
too. Okay, bye-bye.
Bye.
Bye.